Welcome to our first webinar. This is going on our podcast channel. So we're just going to be doing live recordings for this webinar, and we'll be posting on the YouTube channel so the information doesn't get lost in live terms. So thank you to everybody showing up, and today we'll get started. So the first thing I wanted to talk about, just a quick summary about me and my colleague. We're invested in two companies, By the Lace and Breath for Life CPR Learnings, currently in high school and college, and we're majoring in business. And so a little bit about our company. We specialize in private equity, venture capital, and financial consulting across underdeveloped markets. Our job is to provide the vital funding and input to our clients so they can reach their financial goals. And so today, we want to talk about some alternative investments. I know last webinar we talked about just straight stocks and your basic general investments, but some alternatives we want to talk about today are venture capital, private equity, and real estate. So we'll be discussing the tactics from there. So you're probably wondering what private equity is. So private equity is the same as trading. I wouldn't say trading stocks, but it's investment into a private company. So it's not on the market. It's privately ran. A lot of these companies will probably be mom and pop shops, just small businesses. But see, the benefit of these is this: how safe the investment is. The investment is extremely safe. You can pull records. You can track them easily. You can basically data mine them for like the past 30 years, and you'll be able to still have a safe investment. You'll know with these stores the percentage and how would I say the equity, it grows every year with these stores, right? So say you trade in the stocks, right? You do stocks with Tesla, and the stocks just go shooting up and down every single day. But with private equity businesses, private ran companies, they're always going up because they always appreciate in value, especially these mom and pop shops. And then you got to keep in mind too, when you invest in these mom and pop shops, I'd say it's the best investment in terms of popularity, because a whole city will know what a mom and pop shop is, and they'll always get business. They can't be replaced. So, I mean, they can be replaced by companies like Walmart, but say ones that have been around for a long time, they tend to stay around for even longer, and it's the safest investment. It's not, and a good thing too about it, it's not a huge investment like a stock portfolio is. I see people all the time dumping into stock portfolios $10,000-$20,000 when they can really put it in a safer investment into a mom and pop shop with a good deal structure. You'll be able to make your money back, have part ownership of the whole shop, and you have a guaranteed investment. So your investment isn't going anywhere. It's really just a guaranteed win. And then I know a more I'd say current era investment right now is probably venture capital. So venture capital is when you basically provide seed funding to companies. So you've ever heard of like the Snapchats, the Facebooks, the Instagrams, the I don't know, Hulus and stuff. When you invest in these companies in their seed phase, so before they go public, before they get on the stock market, you invest these companies in the seed phase. And the best thing about it though is that you don't have to invest a lot. So because what these companies do is that they go through rounds of funding, right? So they'll go through the first round in their A phase. So that may be like them just, building the program or whichever. Their B phase when they want to start marketing and stuff. But what you can do, especially in our case, and what we do as a company is we invest in companies in their seed phase. So when they have the concept and they have something built, but nothing too crazy to like garner a super huge investment. So venture capital is a good way. to get a secure investment at a little risk. Same with private equity. And then the last thing I want to talk about is real estate. So real estate, we want to mention how it also is a safe investment compared to, stock trading. It's the highest upfront cost, but doing so, you always have something to back up on. So it's the one that's just going to keep on giving you more and more each year, because property always appreciates in value, especially in places out here. Property always appreciates in value. So what you want to do is invest into, I'd say, a multifamily unit, because what you the process goes like this. You go to your bank, right? You get a loan to buy a property. What you want to get is an FHA loan. FHA loan means you have to live in the house or whatever property you want to invest in for a year. And then you will live in that for a year per se. And you can move out. You can still rent it out while at the same time you're living at it. But doing so, you'll be able to have a bit of security in your investment. And so why I advise choosing multifamily units is because you always have something to depend on. So if you were to rent out a house by yourself, so you have one house that you rent out, a single family home, you have to depend on that one tenant that you may or may not have to pay the mortgage. So, but when you have a multifamily unit, what you can do, you can increase the rate of the rent, and then you can still live in one of the units, but you can have more and more people paying the mortgage, and so you won't be breaking even with a mortgage anymore. You'll start making profit faster, and so that's something to think about when it comes to real estate. I know my colleague Aaron has a few things to say when it comes to investing.
The thing with private equity is like Ian said, is guaranteed money. With stocks, if the company like goes down or sinks, that's money out of your pocket gone. But with private equity, the money's still going to be there, and it's pretty much way more secure.
I do want to add too, with stocks, there's a lot of fundamentals and a lot of learning that you have to do. I mean, there's learning when it comes to all classes of investments, but stocks, there's a lot of fundamentals, and the market is so perfect with stocks that it just becomes unfair. It's like there's no point to even getting into it, because a lot of these times they'll, promise you to make X amount of dollars out of stocks, right? But you only get out as much as you put in. So I feel like that's something to keep in mind with stocks.
Yeah. Plus with stocks, like Ian said, like there's such a big competition. Like everyone right now is in stocks, even young, old, doesn't matter. Everyone is investing in something. But with private equity, you don't have much of that competition because it's a lesser known topic. Um, Another thing with stocks, like you said, there's a big learning curve to it. There's lots of certain statistics, math to it that you really don't need to know when it comes to private equity. With private equity, there's just basically specific like things you should know, like venture capitalism, what you're investing in, what the private equity is, how much, simple stuff like that. Any
Yeah,
questions?
somebody asked, what if more than one person went into real estate together? So would you say that real estate is the best way to invest? Real estate is the best way to invest if you want to start investing immediately, because you can get your loan immediately depending on your credit. If you have good credit, you can get your loan immediately, say starting at like a seven something, maybe even high sixes. If you wanted to do real estate together, I would still just operate it under one person, because you still have to pay the taxes, right? But with the loan though, your taxes are included into the loan. So you don't pay property taxes or any of that at the end of the year. So that is something to keep in mind. Real estate is the quickest, fastest, easiest way to start investing. And especially if you want to make a profit, because a housing, like the equity always increases. I mean, that's just how it is. So a house that may be worth, I don't know, 200,000 it's still going to end up being worth upwards of 400, 500,000 within the next, few years. That's just how the system works and how it was designed. So,
All right, especially in
I,
our area over here in the Bay Area,
right.
it's a
And
gold
it's
mine.
like, two, real estate, don't feel pressure to even shop in the Bay Area when you want to look for, houses and stuff. We're in a country where it allows us to be able to look all across our own nation to invest. So I know California, foreign unit out here will probably be at least $1 million. But say you get that same foreign unit in Washington, you'll be cutting that price in half or even less. So, and the same principle applies with how the property and the equity will still increase. So that is something to keep in mind.
Mhm.
And I actually do want to talk about venture capital a little bit more. Venture capital, though a safe investment, is probably going to be out of these three that I mentioned the longest, because a lot of these companies they take a few years to get off the ground, right? And so but you got to keep in mind though, you have to be selective in what you're investing into anyway, because some of these companies they can take years to get off the ground. They say they're still going to make their multi-million dollars, right? But some will obviously do it faster than others. So just be selective and just know when you talk to founders of businesses, you will um, have to be selective in your investment, especially in the seed phase, because at that point you don't just want to be throwing away money. Somebody in the chat says, "I'm thinking of places like Stockton that's cheaper, but since the cost of living is lower there, how will I make money?" You can still charge. You have to charge the rent. So basically, the rent is calculated by property taxes and a few other factors, right? But you still are allowed to increase the rent, and it really just depends on your tenants, because you can't just select any tenant, and it depends on um, where you want to buy. You can buy everywhere, but just know, don't, especially in Stockton, do not get a single family unit, because for a while, or for those first few months while the house is vacant, you're gonna have to pay that mortgage for X amount of years, even though it's gonna or X amount of months, because even though it's gonna be cheaper, it's probably gonna be a super cheap mortgage in Stockton, right? It's still money coming out of your pocket. That's why I would say start off with a 4 unit, just or three, or even a duplex, so you can start breaking even immediately. And so even if the cost of living is cheaper, you'll still make money because the rent will always increase. You can always increase your rent every few years. Say go up 1%, 2%, and depending on what kind of unit you have, you'll be able to start making profit faster.
Yeah, just to add another thing too with real estate, a good thing to do is like to study up on the demographics of the certain areas that you want to pick. Like Ian said, doesn't have to be in the Bay Area. Bay Area is a great place, but we're in America. There's lots of places that are very prosperous. Even Stockton.
Yeah. Even I know what you can look into though. What I would personally recommend, Texas. Get in Texas and invest into things in Texas as fast as you can, for the simple fact that Texas is, frankly, Houston, Austin is becoming the next Bay Area in a sense. So you really got to watch out for that. And a lot of these multi-million dollar mansions are in Texas, but they don't cost multi-million dollars. They cost, say, $200,000 for a 7 bedroom house. Nevada, too. Henderson, that is a good place. Raiders are out there and everything. Henderson, Nevada. Even Vegas. Just know, if you want to start investing in the say property, I I'd look into California as my first option, but definitely be open to explore other states, because if you really want to start making money, California, you got to put a lot in just to get some out. So just it's all like a model risk factor. Are you gonna put in a lot and get little, or put in a little and get a lot out? So that's something you want to think about.
That's another thing with real estate that's pretty nice because it's flexible. You don't have to like pay an X amount. It's really up to you on what you want to like rent out. You rent out a big house and put lots of money into fixing it, or a small place. It's really up to you.
All right. It's definitely something to look at. Um, if you guys want, I can still talk about private equity a little bit more in depth. I know we're I know we're on a time crunch, but I can still back to private equity. Um, just it's just such an amazing investment when you really think about it. Just having the knowledge and the I'd say social status of being part of a mom and pop shop around town. It's such amazing because everybody knows where it is. So you can't buy that popularity anywhere. You know what I mean? It's something that it's priceless. So investments like those, you're supporting your community at the same time. You're still making a lot of money because these shops make rake in a lot because they're community shops. So somebody said in the chat asking about investing into Airbnb. Airbnb is a possible investment. I'd say I prefer regular real estate over Airbnb for the simple fact that I mean it's the same as renting out. It's just renting out for a shorter
You
amount
don't
of
have
time.
much control of it.
So Airbnb, you still got to keep in mind too. You have to give a cut to Airbnb. I'm not sure about their exact percentages, but I'm guessing at least a 20% cut to Airbnb. So that's why it's profitable only if you're constantly doing it. So if you have an Airbnb, you need to be renting that thing out almost every week at that point. Because
Yeah.
other than that, you'll just be losing money.
Also, the money that you're getting in from that, like I said, like Airbnb is taking that. You could do the same thing with real estate and have
Exactly.
all that money go to your pocket instead of Airbnb's.
That's like one of the main things. Just keeping your money within your grasp, like out of banks and stuff. I know you have to make certain loans for property and stuff, but the more centralized you can keep your money, the more you're gonna make. So, and with real estate, like I said before, you don't have to really worry about taxes like that because all their taxes are included into your loan. That'll anybody have any other questions or things they want to talk about? I know we can talk about I'd say some fundamentals of the stock market, but the only thing I'll recommend for stocks in general is just staying with seed phase companies. So like new market, don't have to put much in because you always hear these stories, right? Of people making straight up $2 trillion off of stocks, right? A lot of these are fake. We know that for sure. But you only start making money when you get in early, like really early. Like I wouldn't get in to something that's like already $2,000. You know what I mean? That's why like a lot of people are crazy. I think they're really losing it and listening to the media too much when investing in companies like Tesla. Somebody in the chat says, "What about investing in no risk companies like education?" Education, I'd it's not really profitable at all. I mean, you'll make money, right? Not much. I'd say probably upwards of maybe like $200 a year, depending on how much you put into it. But see, the thing is that a lot of these education like companies and stuff, schools aren't really being funded like that. So if the schools can't be funded, then they can't buy books. So companies like Pearson and stuff lose education, will lose money off of books and like curriculum. So, Sarah, they still sell the curriculum licenses and stuff, and like a lot of these things are online. But I'd say it's not really the best investment because even though you still will make money and it's going to be around for who knows when, there's no point if you're not going to make a lot at that time at that point. And plus, you'll
Exactly.
be losing money. How if schools aren't getting funded, they can't buy licenses. Pearson can't sell licenses and textbooks, so it isn't really the best investment.
All right. Another thing with stocks is that the media is saying, and not just the media, like everyone has that like conception, like misconception that, oh, let's invest in that mainstream stock or like that stable super company, like let's invest in Apple or Samsung. But the thing with that is those are so expensive, and like even if you're getting percentages like of that share, it's a stable company, obviously. So you're not gonna make money. The best bet, like I said, is new market. Just up and coming businesses that are either going to skyrocket up or down, which is why stocks are dangerous. But
Yeah.
those,
I also wanted to mention too, a lot of people will say, they want to invest in stocks that bring dividends. But see, dividends, it's a percentage of money that the company has to pay out to, well, doesn't have to pay out. They can optionally pay out to their shareholders and just take it as like a little reward. But it's like you only get a lot of money from dividends when you have a lot of money in the company. So people are talking about, oh, I want to invest in I don't know, Weibo or Apple for their dividends, right? But it's so expensive is that you're gonna have to dump maybe like $10,000 into a company just to get like $20 of dividends. So at that point, like high dividend stocks, I mean,
I make it
it's really
profitable.
just something you got to put a lot into, which it really isn't worth it at all.
Are you guys able to help people find businesses that are not expensive to invest in, looking for an investment that will continue to pay over time? Um,
Yeah, we actually are. I have connections with a lot of either mom and pop shops, seed face companies, or just like small privately run businesses where you can have a relationship with the person you're investing in. You have a relationship with the founder, so you were looking for an investment that will continue to pay over time. Definitely property first of all, and then once you get set up with property, you start making money from that. Then you want to start looking into investing into businesses. You don't see with investments, you want to make money. You continue to invest not out your own pocket, but from your what you yield from your investments. So say I invest into, for example, Buy the Lace, a sneaker company I invested into a while back. I get 10% from them, right? Over every shoe. So I yield 10%, right? I'm going to use that 10%. Yep, there you go. A lot of gives you positive cash flow. But I'm gonna take that 10%, keep 5% for myself, and then I'm gonna use the rest of that 5% and put it towards my other investments. So maybe even keep only 2% and put the rest, the 8% to my other investments. I like how somebody in chat said it points out how property gives you positive cash flow. That is correct because you only start breaking even depending on what kind of property you get into. You only break even for, I say, the first 6 months. So that's free for the first 6 months, and then you start making profit right after. And some of these companies that'll where I find them, networking, LinkedIn. You just have to reach out to people. So if you guys want to, get in contact with some of these companies, seed phase businesses, just definitely go to SeymourCompany.com, shoot us an email, and we'll get back to you within 2 business days. And yeah, so that's something to look at. Yeah, that seems good for now. Well, thank you everybody for showing up. This is our first live recording podcast session. These will be going up on YouTube, and obviously, as more people come and we start, developing more as a company, these will get a lot better, and you'll start to see a shift in how these are run. So, thank you for showing up, and have a good one.
thank you.